Welcome, everyone, to the Under the Hood podcast with Stallion Capital Management. My name is Vincent Balagia. I am the Chief Investment Officer of Stallion Capital. And today we have with us Steve Ankerstar from Ankerstar Wealth here in Austin, Texas. Steve, welcome to the podcast.
Hi, thank you so much for having me on. This will be awesome.
You bet. Now, we've been looking forward to doing this for a while. So you have dressed the part for this podcast. You look great. But I want to hear a little bit about the suit, and then how did you get to where you are right now? Just start wherever you'd like to. Really compelling story.
Sure, you bet. Thanks for asking. If you can see, I do have a black flight suit on. That kind of comes from my history in the Air Force. So, grew up in Ohio. My dad was military. I saw Top Gun in high school, which is literally like the cheesiest thing ever. And I said, honestly, that's what I want to do with the rest of my life. There were a few hurdles between where I was sitting there as a junior in high school and making the Top Gun dream come true. Yeah. But I fortunately was able to plow through all those hurdles over a series of years and actually get to fly fighters for the Air Force. Got a couple of them here on my name tag. The F-117 Stealth Fighter and the F-15 Eagle. Also have my call sign on here. As you know, fighter pilots tend to have cool call signs that they've earned somewhere along the way. But that's what I did for my first career, if you will. Also, when I was a kid, I watched, if your listeners or viewers are old enough, a show called Family Ties.
Oh, yeah. Alex P. Keaton and everyone else over there. Yeah.
Yeah. That was my dream before I saw Top Gun. So I watched, Alex carry his briefcase and Wall Street Journal around. And I said, you know what? I unabashedly as a kid, maybe it's because I was naive, but I wanted to be a millionaire, and I was vocal about it. I was like, I'm going to be a millionaire. And everybody kind of, said, wow, that guy's okay. Most people don't say that.
Yeah.
But I did. And was most likely to succeed and all that stuff coming out of high school.
It's interesting. So you were driven on the millionaire side and the pilot side, right? So it's interesting, and both of them from something you watched, right?
Yes.
So Alex P. Keaton, Tom Cruise, Maverick over Top Gun.
Absolutely. I was an only child. I lived out in the country. So again, being naive sometimes can help you.
Yeah.
Because you don't realize how hard that is going to be to do those things that you just think you can do. So I didn't have to battle those demons, right? I just said, I'm going to go do it. And when I walked out of the theater and turned to my buddy and said, I'm going to fly fighters, and he just kind of laughed, right? I get home to my parents and they're like, hey, Steve, that's great, but we actually know fighter pilots, and you're not profiling as one of those. I was like, okay. But yeah, so a lot of folks along the way were like, you're too tall, you're too whatever, right? But none of that slowed me down to get through my first career. And I did realize if I didn't get into pilot training or to fly fighters, and I was going to quickly switch into the finance industry anyway.
Got it.
So as soon as I graduated college, I got my MBA right away.
Smart.
So I was all ready.
Yeah.
And then when the pilot training thing hit, I was able to go forth and spend 20 years serving my country, flying pointy and fast moving things.
That's awesome. So thank you for your service. That is awesome. And being 20 years up in the air, that's amazing. And I just looked from the ground, looked at the F-117 and looked at the F-15 Eagle, and those are two awesome jets that we looked at growing up when I was a kid. Couldn't imagine being in the cockpit inside one of those. So tell me, maybe a story or two from the cockpit, but what are some of those lessons learned being in that situation, being in the cockpit, being in charge of serious equipment for so long and just being on that ride?
Yeah, you bet. Well, like with any expensive machinery, which I know there's some floating around here, when you get in charge of that and you take command of it, if you will, there's that man-machine interface.
Yeah.
And you're trying to do your best as the human to max perform that car or airplane in my case. So really is becoming one with the jet. And to do that, you really have to divorce when you step in. It's kind of part of you put on your flight gear and you get yourself mentally ready. And so once you step into that jet, nothing else matters. There's nothing that's going on at home. There's nothing that's going on at work. It's just you and the machine and getting the mission done. Why I tell that story is because the airs are, too expensive.
Huge.
Right?
Yeah, huge.
So certainly that's how you have to view it. And that's also useful for if you're an entrepreneur or an investor is kind of, when you go to make these decisions, focusing all in on nothing but that decision at the time. Yep. And then as soon as you step out of it, then okay, you can go back to all the life things that daily life has to have. But so that's one. And the second is when I talk about risk management, which of course in investing is you talk about it with every investment.
It's key.
Upside and downside. When you had a job for 20 years where I could not come home today, and obviously I did, but some of my friends did not.
Right.
Even in training missions, I mean, we lose more people in training.
Wow.
Not because it's more dangerous than combat. It's just we don't do all that much for combat, right? So, but our training missions are intense, and when you have a job where you can lose everything on one day, you have a pretty good eye for risk management. So that's where it was only natural that I would flow into some form of investing, full time once I was done with that, because I used to having the $100 million rental piece of equipment out there and max perform it and then bring it back and safe and sound.
No. That's interesting because I've thought about the risk side of it, but there's kind of also that protection side, right? Because you're up there protecting your people, protecting your country. You're out there protecting assets of other people, using the equipment that you have to the best of your ability, but really maintaining, this looking at risk and trying to manage risk as best you can at the same time. It's interesting how those things really kind of flow into exactly what you do now.
Absolutely. And I use those analogies all the time. The flying analogies and the investing analogy, especially for our retail investors, it's really just trying to worry about, do I have enough money to make it to the runway, to land, that sort of thing. Or get your finances off the ground, right? They just have never done anything, so you can't get up and get going unless you start. So all of those play. And there's a lot of pilots that have left the industry or left the flying industry because you get too old.
Sure.
Which, not too many careers do have that. Where
like mandatory retirements.
They do at 65, but really, as far as the fighter world, flying past 35, I made it to 38. There's just your brain's just not as sharp as it was as a younger person, so you kind of time out of that super fast paced career.
So it's not something I can get into right now.
You could, but you would be handled with kid gloves, if you will. But there are cool programs out there where you can go fly in the backseat of some usually old Soviet fighters where you can do dog fighting, pay $10K or something for the a fighter experience, if you will. So do that and check it out. I think you'd love it.
I will take you up on that because Top Gun didn't affect me exactly the same way that it did you, but I remember just those jets flying off the aircraft carrier and then landing on a carrier. I couldn't imagine trying to do that. I mean, that's some risk mitigation right there. But it's awesome how you took that and ran with it, and it changed your life, right? So So thanks to Jerry Bruckheimer and Don Simpson and Tom Cruise.
Yeah, everything that Top Gun had to offer. I go back and my wife was like, we should watch it with our girls so I could see your motivation. I was like, that was yesterday's movie.
Yeah.
There's a lot of stuff doesn't resonate like now like it did back then.
Sure.
But they did watch it and they were like, yeah, Dad, this is pretty cheesy. I'm like, I know.
No, you weren't there.
The second one was good though. I did have a client event where I invited 80 some clients out. We filled a theater over at the Flicks Brew House.
Oh, yeah.
Had some drinks and food and watched Top Gun 2. And after I invited everybody out, I was just like, please don't be terrible. Right? Please don't be a bad. And I thought it was great. There's still some silliness. Anytime you try to replicate, flying at high speed or driving at high speed, there's some things that don't really translate that well. But overall, I thought it was a good movie and a win for Top Gun.
That's true. It's funny you say that because there was a movie that came out recently, Gran Turismo, which was really a pretty good movie. It was about racing and they're driving Nissan GTRs out on the track. And I think even part of it was filmed at Circuit of the Americas here because it looked like they were running the track in reverse, but you saw some scenes and I've been on the track quite a few times. So I kind of know how to go on it. And I've had my GTR on the track a number of times. And I just thought it was, but I could tell, I mean, there is a lot of movie, kind of transgressions of reality in that, where you'd say you wouldn't do that. You're not shifting the car. You're not, 15 times, 15 upshifts in a row. But I get it, and I could imagine, Maverick was like that too for you.
Right? Yeah, everything's nice and smooth. It's not that way in the car. I've been around the track a few times myself, and it's not that way in an airplane for sure. You're shaking all over the place. So, but they can't carry that forward because it's it would ruin the cinematography of it all, if you will. But especially Top Gun, they showed the G-forces thing, and there's some of it was a little bit of a stretch, but kind of a cool experience. I know you get G-forces in a car too,
not like that though.
Laterally, but you get them straight down in the airplane. So all of a sudden your 40-pound head weighs 400 pounds, which is a little different for your body to handle. Yeah.
I mean, that's just it. You're right. You get the lateral G-forces in a car. And certainly you feel that you're bracing, you're belted in, but I guess the Z-axis G-forces, those are the ones that really mess with me. And certainly more as I get older as well. So yeah, I could imagine that.
Yeah.
So you got your cruiser call sign. I know a lot of times, pilots have a little story behind a call sign. How did you become cruiser?
Well, there's the public story, then there's the private story.
Sure.
Fortunately, mine doesn't really. And of course, everybody would say there's no private story to mine, but that's because it's private. But there is, depending on everybody's age. There was a movie Stripes back in the day, Cruiser was a bit player in there, and most people remember him from the scene of the big toe, and if you call me Francis again, I'll kill you. Cruiser was the guy that said, I like fast cars and fast women. That's why my friends at the car club call me the Cruiser.
Sure.
And John Candy followed on with, they should have called him the Dork. So when I roll into the fighter squadron, I just bought a new Mustang Cobra convertible, the 1998 when they brought the Cobra back.
Yeah.
And I'm a brand new car, which is not me because I'm pretty financially, I shouldn't buy new cars. Well, I rewarded myself for getting through pilot training and flying the F-15. So that's gave me my car. I also had a motorcycle at the time. And also all I ever talked about was investing. That's like my hobby on the side. Yeah, so there's, had that kind of dorky
that passion,
that dorky component of, everybody else is talking about sports and stuff. And I'm talking about, hey, why not Apple stock right now in 98, right? So
yeah.
So, took a while for all that to pan out and go, hey, maybe we should have listened to that guy.
Right now.
So it was a perfect call sign. It was, and once you have a call sign in the Air Force, any flying job, that's what people refer to you. So in the emails, I get a hey cruiser that are from my flying buds. So it's kind of crazy. It's a call sign for life.
It's your identity then, I guess.
It really is.
Yeah. No, that's cool. That's very cool. Well, you mentioned the markets. If we switch over to kind of what you're up to right now,
sure.
What do you think the most important things are that investors need to be aware of, both if they're looking at the markets or they're working with their advisor? What should we be aware of right now? What are you seeing?
Sure. I'll back that up a little bit with, as I was getting ready to leave the military, I already knew that my second career was going to be in investing, and I wanted to run my own firm.
Yeah.
So there's an entrepreneur piece to that. So for folks that are thinking about doing that, I do kind of say being naive is your friend, because I didn't know all of the hurdles. I'm sitting in the Middle East at Qatar at the command center over there where I spent my last year in the military. And I literally, Googled how to start an investment firm.
Wow.
And I was like, just like becoming a fighter pilot, I was just, that same passion of, I'm going to do it.
Right. Investigating it. Right.
I just figure it out. Right. So I called up, I found this firm. I'm a registered investment advisor, so RIA, and that's one. Most folks like me would go work for Edward Jones or somebody first and learn the industry. I'm like, I have no interest in doing it that way. I want to do it my way because I'd seen the operational efficiencies of the military, and I'm like, I can bring that into investing. So
interesting.
So I went out, Googled it, found a firm that said it was called RIA in a box. So looked them up, called them up, and they said, yeah, send us, 4,000 or whatever it was, and we'll send you all the checklists you need to start your own firm.
Wow.
I said, okay. So send them the check. Here come the checklists. And I call them up the next day and say, okay, I'm ready for the next round of checklists. And they said, well, that was the first year of checklists. And I'm like, well, I don't have any clients yet. So, I'm able to burn through the stuff pretty quick. So I was able to stand up very quickly. And then I had my initial buds in the military that I had, advised for free for a number of years, who'd kind of seen, okay, this guy's got a knack for this.
Right. Knows what he's doing.
And he's not afraid of individual stocks, which a lot of people are like, oh my gosh, individual stocks, so scary, so risky. Well, it's like fire. You have fire in your house. You can't be an idiot with it. Otherwise you'll burn your house down.
Yeah.
But it serves a huge function in your life. So stocks are the same.
Couldn't live without it. Yeah.
Yeah. So, stood up my business on that premise. Initially, I called it Afterburner Financial, and couldn't give away the airplane sort of stuff. So it's now I changed it after a couple of years to Ankerstar Wealth because everybody thought I sold insurance when I had financial in my name.
Got it.
Which we don't do. We only invest for folks.
So that's interesting, Steve, because you don't see many advisors that just go from you're a different career,
right,
without going through some type of transition. But man, I really love the drive and the focus, because it's like you said, okay, ready to become a pilot, want to become a millionaire, but then you said, all right, I'm going to become an RIA, do RIA in the box, and then just run with it. That's pretty impressive. It really is.
It's the hardest way to do it for somebody. So when folks are like, how do we do what you did? And I'm like, you probably don't want to do what I did. And like I said, if I had to go back and do it again, I would still do it, but I would know the headaches that lie in front of you.
Sure.
So a lot of folks, especially the entrepreneurs, or when your backstory of whenever you started, there's things you don't know, but you still move forward every day anyway,
It's true.
as fast as you can. And I think it was Mary Andretti said, if things seem completely under control, you're not going nearly fast enough.
Yeah.
And that's how we trained fighter pilots to get better, is they were comfortable doing this and that up to a certain limit. And then my job as the instructor was to take them past that limit and increase that limit. So that's their new limit. And really, it's unbelievable what humans can do when they can kind of get over their own fears, their own doubts, and just move forward as fast as they can. So I took that into the investing world, from just me 10 years ago to now we have 5 other employees, and
it's awesome.
It's getting there, and it's growing slowly over time, as fast as we could do it, but also maintaining that protection to make sure we didn't run afoul of something along the way.
I like what you're saying though about fear, because I've seen that in business. I've been in business for a while, and I remember when I started, and I was kind of young. I was 26 when I started Stallion, but it was there was that fear hurdle of, okay, I have to get past this to start, and there are good times. Maybe there's never a good time to start a business, and then maybe it's always a good time at the same time, but you kind of have to get over that hurdle of fear.
I'd agree with both those statements.
Yeah.
There's never a good time. It's always a good time. Kind of like investing, right? You never know when it's the low of the market or the high, and people get all wrapped around that. It's just like, well, you should probably just start and then take the ride. But for anybody that's looking to, especially advisors, there's this, I'm too young.
Sure.
Like my youngest advisor is 19.
Wow.
So he's a sophomore at college. He's a sophomore down at UT in the honors program. He's brilliant. He's been with me since he was 14. Passed the Series 65 right after his 18th birthday, as part of a personal challenge. I'm like, hey, you want to take this? And he goes, I don't know if I'm ready. I'm like, you're ready. Take it. And of course, he's genius. So he studied and passed it just fine. But certainly you get over that, well, I'm too young. And I'm like, well, here's the scoop, Jaden. You'll be too young until there's a day when you say, no, I'm too old.
Yeah, that's right.
So don't let yourself off the hook, right? It's like you've got everything in front of you. You show competence. It doesn't matter what age you are, especially in the money business.
Sure.
Or kind of like driving a car, right? I mean, it's just like, don't care if you're 40 or 20. If you win the race, then we're going to put money in cars behind you, right? So, and get this done. So yeah, it is certainly a challenge where everybody's trying to find a reason not to move full speed ahead. And, it's largely battling yourself.
It's true, because there's always a ton of reasons.
There's always be a reason, yeah.
Yeah. I like what you're saying about Jaden, though, is that, you've pushed him, you've encouraged him. And that's just it. I mean, if you're going to start as an advisor at 19, the skill you can develop, the book of business you can develop, perfect. I mean, that's awesome.
Yes, it is perfectly set up. And it's an older industry. I'm still at 54, younger than the average age of the advisor out there.
Wow, really?
So for those thinking about going into the industry, absolutely, you're helping people. There are investments that are good and sometimes they're bad, but you're helping people through them either way. So it's really a great industry.
Let's talk about that for just a second.
Sure.
So you just shot it out of the gate, out of the hole, right, to get into the industry. What are so for other advisors or other people that are looking at becoming registered investment advisors, maybe being independent like you are, what are some lessons learned that you would share with them from those first 5 years or so?
There's 2 ways of doing it. There's what I did, which is very difficult, but you keep all of your upside. And then there's the standard way where you move into the industry, work for an established firm. And the difference is, when I say keep all the upside, is when you sign on as an advisor, we use Edward Jones, but Raymond James, could be anybody.
Right.
Once you onboard, you get intense training, which is good. For most people, it's good. For some of us that kind of, have our own opinions, that can also be a little bit restricting.
Sure. Sure can.
So it's like, okay, it's like I'm a smart guy. I was older, obviously, at 43 when I stepped into the business. So I was like, I didn't kind of need the direct hand holding. But for folks that go in, you get all this great training, which is fantastic. It's proven over decades. These are very successful firms. They take care of millions of clients and billions and trillions of dollars. And you step out of that, and one of the first things you'll do is what they call cast the net, right? You talk to all your friends and family and say, and of course they all know it's coming, right? You're like, hey, Steve's an advisor now. Yeah. Steve's an advisor now. So when, he calls and says, hey, I'd like to talk to you about something. It's just like, I knew this call was coming, right?
Sure.
but you sign everybody up, and then they're on with the whatever company you're at. And then by the time you go, okay, for whatever your reason, all motivations are different. But if your motivation is to eventually be on your own, then it's all the people that I love and care, whether they're friends or family, care about, are already with the old firm.
That's right.
So when you start, you're kind of out on the street.
Right.
So it's not right for everybody to start independent, but certainly if you're not scared of living in an unknown territory for a while, you can do it.
It makes a lot of sense. That was a little bit of my story. I was kind of in the industry for a little less than 2 years. Had always just wanted my own firm, though. Just something that's just inside you. And it wasn't a great time, like because it never is. But
right.
but I went out and did it, and I said, well, look, if this doesn't work, I'm sure there are plenty of other things that I can go do. But you have to take that challenge of going for it. So I love it. I love what you're saying.
It's interesting so that you mentioned that, because you do kind of have to go all in. Some folks ask me, it's like, why don't you fly for airlines on the side? And I'm like, if I do that, I'll get sucked in, right? Or people are like, do you fly anymore? I'm like, I don't. Because if I did, I would have to maintain proficiency, and it would take some hours out of my day where I'm not, taking care of clients. So right now I've got one mission, is to take care of my clients and recruit new ones. So if the phone's ringing, I'm either talking to somebody I know everything about, trying to help them through a situation, or I'm talking to somebody that I might be able to help. It's kind of like all in. But I did say, for those that are married out there, is that you do need a spouse on the same page. So we had pillow talk / table talk about how this is all going to work. And I was like, we were very fortunate, since I'd started investing at 16. I was fortunate enough to have funds to be able to live off those funds while I went out and start my own firm. So that does make things easier.
Sure does.
But it was like, hey, how about this? I go, how about 3 years? And I'll try this financial, advisory firm thing. And if it's not working after 3 years, I'll happily go to the airlines. But I'll be glad that I tried.
Yeah.
You'd rather try and fail, and people don't like the fail word, but get over yourself, right?
It's reality.
Yeah, you try to make something happen, and it does or doesn't happen, and you move on either way. Even if it works out great, you celebrate for like 2 seconds and get back to work, right?
That's right.
So we did have.
What did she say?
But she was like, you're not going to fail. It's standard spousal support, right? She's like, you don't have to worry about that. And I'm like, well, part of risk management is you always worry. We talk in the military about the 5 different scenarios, and this is everything works great. Hardly ever happens. Works pretty good. That's kind of what we're expecting is kind of average, below average. And then this is catastrophe. You have to avoid catastrophe.
Right.
So going out of business, going bankrupt. I mean, investors, sure, we take a lot of risk. And we have a lot on the line that some people would look at and say, those numbers are insane. I could never do that. And it's like, well, it's different for everybody. But all of my numbers aren't on the line.
Right. That's right.
The safety net's there. So that allows me to be, in folks like us, especially in alternate investments, allows you to take on more risk and for more upside because the safety net's in place.
Sure.
So, yeah.
Makes sense. So tell me a little bit about, 10 years now that you've had Ankerstar Wealth. What's really the vision for the future? You mentioned bringing on new clients, doing a great job with the clients that you have, but just share a little bit about where you're going.
Sure. Well, we're focused entirely internally right now. Okay. So, there's still new clients coming on, but we're not really doing any big marketing, play to bring on more clients. But in the past year, we brought on a couple more advisors. So there's myself and then 3 others. Okay. And then we're getting a building next year right down the road, right in between Cedar Park and Round Rock. And it's going to be 3,500 square feet. Similar to this, it's designed as multiple offices, but the mentality of I'm not going to share an office. I'm going to buy the whole building.
Sure.
I think we might share that. And so the end offices, it's going to be a family practice model. So do not have them identified yet. Reach out if if this is you when you hear me say this, but a CPA or a CPA group on one side to be able to do folks' taxes, and then a state lawyer or state planning group on the other side, and have them right there and available while we have a building where we occupy the middle. I'll have an executive lounge in there. It'll be pretty fancy, I hope, is my vision anyway. And then also have a classroom. So we can kind of host the standard deal of come on in, learn more about Social Security, or learn more claiming strategies, or whatever folks want, and we'll offer it to current clients as well as prospective clients. Hey, come on out and then hopefully show them a great experience. I mean, you do your social events. They're fun. They're, it's not all business, but it does generate business.
Have some fun in there.
Yeah, and you also get to meet cool people, whether they become business, in business with you or not. So that's kind of the goal. So we're looking inwardly now with our two fairly new advisors. They've been on for a year. 20, 25 clients, kind of guys that are make the mistakes now.
Right. No, it is. So it's a good idea. Right. Where you're there with them.
Yeah. If this works, then when I start taking the stage and we have folks in, and you guys can be invited in and give your pitch, and for folks that are interested in learning more, if that generates a whole bunch of clients, we'll have all of the systems in place. Sure. So really, that's operational efficiency. The industry standard is 1% for the management fee. I charge 0.9.
Okay.
And I do that because I'm more operationally efficient than basically everybody out there, and that comes from my background.
Sure.
The high speed, low drag background.
I like that. High speed, low drag.
Yeah, and I want to pass those savings on to clients. So that's kind of the vision, if you will. So far, the vision has worked out very well, but you can't always assume that. Sure. But that's the goal, is to have a facility that'll double or triple our assets under management. And if it doesn't happen, we tried our best. If it happens, then fantastic. Off to the next thing.
I love the idea, because I think investor education is so important. That's one thing that we really emphasize is I want our investors to understand our methodologies, what we're trying to do, what we're trying to accomplish, and then how we're getting there. So I love that idea. And then I also like the community side, where we're coming together, getting to know each other, having fun with each other, but just feeling like a little bit of an investment family. And I think that's a big deal. And then I love the tax and the estate side there, because that is so closely related with everything that you're doing. It's like, okay, you're generating yield, right, for your investor clients, but then how do they structure that to be the most tax efficient? And then how do they structure that to really affect the future generations and their families? So it makes a lot of sense.
And there's, I'll keep going back to operational efficiency. You look at race cars, and, every ounce you can get rid of, whatever you can do to get more, right? And so it's a little bit selfish in the fact that, like right now, if I'm working with a high net worth individual, I say, would you like me to discuss your situation with the CPA so we can build that relationship? So right now I have several CPAs that I work with.
Sure.
But it's operationally efficient if I could take that and go, let's bring that down to a handful of CPAs.
Right.
So we don't have to spend so much time building that relationship. And again, all of that, that efficiency leads to being able to provide a good service a little bit cheaper than everybody else, because we've focused the effort.
No, makes a ton of sense, and it helps those end investment returns anyway.
Yes,
right? When
absolutely.
You have that management fee. That's excellent.
Pay less to the government, especially on the tax side there.
For sure.
Yeah,
I'm gonna have to remember that. High speed, low drag.
Yep.
It's I hadn't thought about business necessarily that way. Certainly, I thought about cars that way, but I like that mentality.
You'll be able to look at your balance sheet, literally, and in your P&L, the dorky business stuff that we all love. But you look at that and actually look for the where can I cut out drag, right? Mm-hmm. What expenses are there that we're not getting any value or enough value from, and really kind of focus on things there. I think you'll get a kick out of that.
I like that.
Yeah.
I like that a lot. So what's your focus right now with your clients that you're serving? With the current markets, you have some volatility in the markets. You've got questions regarding the election next year. You have interest rates that are maybe not historically high, but a lot higher than they have been. What are the things that you're focusing in on right now?
Sure, you bet. So there was volatility that we really haven't seen. If you go back, not to go too historic, but pre-COVID, and I'll talk about an investment journey,
sure,
which everybody's different, and it depends on when you start the game, right? If you came in right before the big crash, 2007 through 2009, you probably invested a couple thousand, lost half of it, and took what was remaining and never invested again the rest of your life, right?
That's right.
So, but that was your experience. If you, after that, you hopped in, you're like, this is great. So we kind of went through, if you remember the little Lego guy, I had younger kids when the Lego movie came out, the guy running around going, everything is awesome.
Yeah.
That was the investment experience for everybody from 2009 until COVID.
That's right.
Everything made money. It didn't matter whether your stocks or bonds or alts. It didn't matter. Everybody's a genius. Everybody's making money.
Right.
Everything is awesome. Well, then you have COVID hit, and we won't get into the political side of that. But the market takes a big hit. Everybody kind of reassesses, like, am I going to die today? So as you know, that it's that good inner reflection. What's important to me?
Sure. That's right.
So
pulling in a little bit.
Yeah, it kind of focused everybody on, okay, Yeah, the world could literally end. Well, it didn't, but we didn't know.
But yeah, a lot of people
didn't
thought
know.
that it might.
Yeah.
So yeah,
So, but then kind of off we go back out of that. And, you put free money out there. Okay, that's obviously going to, prime the pump, right? Boom.
right.
Straight gas. Like afterburner in an airplane is straight fuel bypassing the engine and dumped into the exhaust.
Hmm.
You'll go pretty fast if you dump raw fuel into the exhaust, super fast, which is awesome. So we kind of snap back out of that. So it's like, okay, so a 15-year period, investors took one punch to the face,
right?
And sometimes, everybody's got a plan until you get punched in the face.
Punched in the face, boom.
Well, an investor gets punched in the face all the time. I mean, you really do, but they didn't have that experience of duking it out every day in the markets, trying to do your best and get that return. So going into 2021, it's like, okay, we really haven't had this. Then we have inflation, which you could argue about what caused it. Doesn't matter.
But it was there. Yeah, it was there.
The Fed said transitory. It's like,
not so much.
It's proved out to be wrong. So yeah, so then we have to raise these interest rates. And so for all these folks that had never really seen what happens in an interest rate, market that we're raising the rates. So yeah, that was volatility. So there was a lot of helping folks through that. But to kind of get to the answer to your question is we had a terrible 2022 to where the focus with clients was loss mitigation, right? It's like, yep, we're not going to sell everything. We don't go to cash. We don't get off the roller coaster that's going to lead us to the promised land.
Right.
It's like, but we do make some adjustments along the way with the holdings that we have. So put some risk management in place to be able to really lose less, which clients don't like to hear lose less, but that is part of it.
Because they want to make more now.
Like, no, I want to make money. I was like, well, this is a tough environment right now. There's a few specific things you can do. But we're not going to sell everything, go all in on that, because then you could risk catastrophe, right? And you don't ever end up down here. So coming out of that, though, we ended up, we've had a historic rate hike raising cycle.
That's right.
10 straight, and then so a little few after that. And all in preparation where the Fed tends to raise rates till they break things. Had a few catastrophes along the way. Silicon Valley Bank, one of them, but that might have happened anyway. But we didn't really have the recession that generally follows that rate hike cycle. And there's a reason for that. And it's full employment, in my opinion. Now, you can get into opinions here. But two things. One of the things historically that are true will be broken this time. We've never raised rates like that and not had a recession.
Right.
So that's one never. And we've never had a recession at full employment. Well, one of those two things is
one of them is going to go.
Going to go. So that's kind of where we are right now going into, we think we had good inflation numbers the past couple of weeks. Mm-hmm. And now the market's starting to celebrate that again. I think the Fed's done raising rates. They always have to say data dependent.
Right. They have to back up just a little bit, but you did have a much healthier inflation number than we've seen in some time, a long time.
So yeah, we're on a path to health. We may get the perfect soft landing, meaning raise rates, no recession. If they do, they'll go down in history as geniuses. They may raise again just because people tend to overshoot. Yeah. So they'd like, Powell might say, well, I'd rather be wrong to killing inflation and raise rates and cause a recession versus be the guy who didn't finish the job.
Sure.
Raise rates enough, started lowering them, and then we still had inflation.
Right.
Historically,
it wouldn't go down well.
That's the George Bush one, Desert Storm. Did 90% of it, but didn't finish the job. So we're back 10 years later.
Right.
So, that sort of thing. So we'll see. So I think there is volatility in the market, but for folks that are looking for safe stuff, you have CDs at 5% still. So
pretty
you can lock that in.
It's been a long time since we've seen those rates.
The tech sector, which we really specialize in, has been beaten up. So there's good opportunities. We're re-entering the tech sector. And then, of course, whenever there's volatility in the market, it leads to bringing up the idea of alternative investments.
Sure.
So
yeah. So maybe we'll talk a little bit about alternatives. Fair game is that we are in the alternative investment space, and my opinion is that they have a place in portfolios. But I would love to hear your opinion on how you use them, what you look like, what they look like for your allocations, and if you've kind of been on an alt journey. Because I was talking with another advisor yesterday, and he said, "And 5 years ago we were at maybe 2%, and then as portfolios have really kind of modernized," he says that for him, that he might be a little bit of an outlier. He's at around 30-40%. So he's so we like the things he has to say, but I want it to be about what you really think and how you've used them and what you think is important. And I think this is a question that a lot of people are asking right now.
Sure. And here's how I explained it. So not to be too long-winded, but the whole investing journey. And It starts with, when you were younger, your first job, you probably were lower rung and you worked, like I worked at a golf course, which I thought was going to be glamorous until I found out was make coffee for the first like 2 hours and then go clean the restrooms with their, I was like, they're like, they painted the picture of, hey, you're getting a golf cart and you can go all over and it's free golf. And I'm like, yeah, that didn't, a little different from reality. But yeah, so you work, you start at that entry level, whatever entry level that is, college or not, doesn't matter. You start at a base level and you're like, if I can work my way up to be the manager, then I'm set, right? Because that guy's making a killing. Okay. And then you make it and then you move up. It's just like, well, there's the like supervisor and then there's the manager. And then you see the manager and you're like, okay, well, he has a boss or she has a boss, and who's that? It's like, well, that's the owner.
Yeah.
So you're like, well, maybe, and some people never get past any of these levels, but it's kind of the levels of investing, if you will. It's like, okay, well, how can I become an owner? Well, you could buy a franchise. It's like, that's expensive.
Sure.
Or you move into the stock market, which, if you back out all this mutual fund, index fund crap, I mean, and I say crap just because it gets away from the core efficiencies of the building blocks are individual stocks and bonds.
That's right.
Everything else has layers of fees with it.
Layers of fees all inside.
So you're like, okay, well, if I participate in the market, then I can, be a part owner. Like I buy a share of Apple, you are technically a part owner of Apple. Like my girls like to say that. Like I'm part owner that makes this company.
Yeah,
right?
I think we have some Disney share certificates. So
Perfect.
You own this park.
They used to do the one share of Disney.
Yeah.
And it's great because that could lead to a lifetime of good habit patterns with money, which is, I'm here today really because my parents at 16 said, hey, go get a job and we'll fund your IRA. And I'm like, what's an IRA? And they're like, it doesn't really matter. It's free money to you. Yeah. So you keep the money you make and then we'll put $2,000, the limit at the time into an IRA for you. I'm like, I like free money.
Yeah. Thank you, Mom.
Free money.
That works.
That's great. And then watching that grow, but doing that every year, you're building habit patterns. But back to the ownership. So you're like, okay, well, if I started here, I want to keep moving up that chain. Right. Well, you get into if I can own one company or real estate's the exact same thing. Sure. Or buy a property. And if you want to spend your whole life in real estate, then knock yourself out. But you buy one, instead of buying it outright for cash, you lever into it and you buy another, you use cash flow to buy another. Same thing with stocks, dividends, blah, 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 blah. So you build up and then at some point, the numbers get really big. And generally, the accepted definition, you have accredited investors, you need $1 million investable or a high income, 200 to 300,000, depending on whether you're married or not. Well, once you get to the, you're kind of maxed out in the stock market. You got a 7-figure 401k if you've done everything right. Or $500,000 or so. It's like enough to where the volatility in the market is not your friend anymore.
It's those swings start to make some really big changes on that balance.
The swings you liked when your account was 40,000 because you're putting 1,000 a month in and you can capitalize on dollar cost averaging and buying stuff low. Well, when that's 500,000 and you're putting 1,000 in. In the market's moving, that you're like, oh wow, I don't like that.
Right, I feel that.
Right, you can either embrace it, understand it, and go, yeah, I get it. The numbers get big, right? And that's what makes me kind of perfect for my job is because the numbers are big and they do move. It's like I've got no problem with that because I get it. But there's a certain point, and again, it's generally over $1 million when alternate investments are really good for folks. The financial industry, of course, tries to lure people into annuities at that time.
Right.
Like, buying gold today's the best day to buy gold. Somebody on CNBC says that every day for the past 50 years.
For sure.
It's like that can't possibly be the best day every day.
That's just it. It's the same story every day forever.
Yeah, it's scare tactics. So what they try to do is get you to scare you into annuities or gold or whatever, or a life insurance policy. The worst. That's an opinion. Start the comments. But you hand your money to a financial institution who makes a whole bunch of money with it and gives you a little bit of it back, and everybody's happy. I'm like, no, I don't want to participate in that. I want my money to continue growing, and the way to do that is through alternate investments. So now you can get in even earlier, and the returns are there to support that historically. Now you can get in even earlier in the cycle, to where you can get into developmental projects or funds of funds or funds of properties that are out there. And whether it's, in the credit space, the real estate space, or private equity space, Blackstone has a new offering out there to where you can kind of get your money in where the professionals get it in, where the endowment funds invest their money. And, if you're sitting at home going, well, I can do better than the Harvard endowment fund. Well, you're being arrogant at that point, right? You probably need to get over yourself a little bit. And say,
maybe they'll do better for a while.
Yeah, I mean, sure, you buy one stock, get lucky, and go tell the Harvard endowment fund that they don't know what they're doing.
Here's how you do it. Yeah.
But yeah, that kind of gets you there, and so that's the whole world of alts as I describe it. And there's a higher level at the venture capital.
Sure.
And you kind of, and that's where you're getting in before the idea becomes, right? So you got secondary markets, and most people don't ever get past the secondary markets. And you have your alternates of different flavors. And then, of course, the seed money, venture capital, super high risk, but you're getting the most return for it if
It works out.
If it works out. So get into a fund that I use here in Austin. I need to introduce you to those guys that can, they're at the seed stage of all these different businesses. You lump it together to reduce the risk.
Sure.
And then watch your money grow from there. So that's kind of the ultimate ladder. So some people don't ever get to alternate investments. And you do have to qualify, but they're perfect for somebody that does qualify, should have a piece. 40 is higher than what I would recommend.
That is one of the higher ones that I've seen.
So yeah, but they also have to understand it.
Sure.
And that's not when I close alternate investments for my folks, that's a 6-month process. They need to hear the spiel 3 times, 4 times, before they put their money in. Right?
It's something different, right? Because most times, what you hear, what's been advertised are mutual funds, ETFs. Now you do hear about annuities, you do always hear about gold, but you don't hear about what a lot of that institutional money is doing, where that's really going. And I think that's really one of the big changes in the market. Is for so long that was just for the professional wealth managers, right? Or those institutional investors. And now it feels like it's really opened up to a lot of the market, not all the market,
right?
But a lot more than you've seen traditionally.
What I like to say, and we kind of target the $500,000 to $1.5 million. That's kind of like my wheelhouse. That's your military 20-year career person who's done good investing.
Yeah.
Ends up there with a nice pension. So, and it's like the now what? Well, so you can go into real estate, that works. You can go continue in the market, or you can start looking at other things. But when people out there say, and it's usually in a complaining mode, interested to see if there's comments on this, but everybody complains it's a rich get richer world. And I'm like, absolutely.
It is.
And they're like, well, aren't you supposed to be empathetic? Well, I am empathetic with your situation. I go, but it is a rich get richer world. Largely, the markets are probably the worst because there's no real sheriff there to stop you from making bad decisions, right? So the market goes down, you freak out, you sell your shares. Guess who you're selling them to?
That's right.
Professionals, right? I'd be happy to take your Apple shares, 50% off.
Yeah,
it's like,
sale.
We got a sale going on to everybody, and you're like, sell. It's like, that's crazy. But the same thing with, it's the comfort level that keeps people out of alternates, and because they are harder to understand.
They are.
But if you can, there's a leap of faith there, and that's why. And I should have disclosed earlier, I'm an investor in the Stallion Texas Fund, and it's you don't need to know everything. Like when people buy a stock, there's really all the information that's available to you. And you can pore over it, and you can sit there and watch the stock move up and down all day long, and CNBC will talk about it. CNBC doesn't really talk about alternate investments. They don't necessarily have the kimono open all the time.
That's right.
They provide what they have to provide, and then you have to trust. So it is a leap of faith versus, and you can't change your mind often. There's a lockup period or a penalty associated with it. And there's an expense fee for professionals to do their job, generally, well north of 1%, sometimes 2%. You're trusting that team is out there doing their thing on your behalf. So you have to relax. So when I talk to investors that do meet the qualifications, if they're a little bit skittish, I'm like, this is the best thing for you. I go, but it may drive you crazy because you can't freak out over it.
It's true.
It's a little bit of a black box. And VC is even a worse black box. It's like, we'll give you an update at the end of the quarter.
It's true.
So you got to trust. And a lot of people, they're not, they're not about that, right? They want to be able to see everything.
Want to be able to see it. Well, and I like that point because I think that's one thing that we work with. We try to educate our clients, our investors, but at the same time, we do have our own portfolio, and we're out there competing in the market as professional money managers, not just to bring investment in, but really to try to find the best projects to loan money on, or the best projects to invest in. And it is competitive, right? There is competition. You want to deal with the best people. And so maybe we make it a little bit of it's a black box, but we try to make it gray, right? We try to say, this is what we're doing. This is our strategy. But ultimately out there, we actually are competing for yield in the market so that we can send that home back to our investors. But I appreciate you saying that, because that is kind of the world that we live in.
It is.
And it is a lot of work to try to go out there and create solid yield and have great downside protection, right? And that's really kind of where you're allocating your capital, right? Where you don't have catastrophe, right? Like what you're saying. and you may not have an amazing return like you might have in some alternatives or options where you can just bet the house and go to the moon sometimes. But I think kind of, for us, it's hitting those singles and those doubles again and again and again consistently is what makes sense for us. And I think in 2022, when the market was having a really good, really hard time, we were heroes. Then there have been other years where the market's gone to the moon, and they said, "Well, what are you guys doing? Why can't you guys do this?" I said, "Well, we're not correlated to the market. We don't have the market exposure, and if we did, then you'd still be on that same roller coaster all the time that the market has. Which that's fine. There's nothing wrong with that roller coaster. But I think sometimes, at least with me, as I've gotten a little bit older, a little bit more successful, I'll watch maybe other people ride that big roller coaster, and I'll ride the smaller one on the side, just with a little bit of diversification. I think that's why we exist. Other alternatives exist as well. So.
Yeah, absolutely. And I think that folks that are maturing as an investor will be more attracted to the alternate investment space versus just the market space. It's there's more out there to get that higher return. But it's a different experience for sure. It's gonna be a subscription document, and things that I can't just log in and buy it through my Schwab account, nor can you log in and sell it to your Schwab account. It's a higher level sort of stuff that I think a lot more people will find attractive. But you're right, they're not getting the education, from CNBC's that's telling them to buy gold because the world's ending.
It's true. It's true. Yeah, it's true. I like that. So, Steve, I love when people are looking at advisors, when they're looking at starting relationships with people. What are the things that they should be looking at? You've been doing this 10 years now. You've built a great practice, very happy clients. But if someone is looking out there for a new advisor, and certainly someone that has kind of that suite of tax preparation and strategy, as well as the estate side, what do the people need to look for? What are the things that they should be looking at?
Sure. I love that question, and I answered, I think, differently than most because return is not that high on the list. And we are in a business where return is everything. Well, yes and no. No matter what your strategy is, like you just talked about, sometimes you're in favor, sometimes you're out of favor. There's no in a sporting match, there's a clock and the clock ends, and there's a winner declared and a loser declared. There's no clock in this game because it's a lifelong pursuit or multi-generational pursuit. If your family happens to see the light, is probably not, if they happen to become investors and think like investors, then it's multi-generational. But as far as what you should look for in an advisor, and again, I talk to my people, which are, that $500,000, $1.5 million type of folks makes up the core of our client, is somebody that you trust, somebody that you like, and somebody that will communicate with you. That's far more important, that they're there for you. And I like to say an advisor's and I've answered this sometimes, like, what do you do? It's like, I'm a therapist. And
I like that.
I mean, I talk more about financial therapy than I do anything
financial
else.
Therapist. I like that.
It's because when the phone rings or they send the email, there's a concern. We pride ourselves on that rapid response to client concerns. So you have a concern, so I'm going to take care of that concern, or my team is, to answer that question or remove the doubt or, bolster the strategy or change the strategy if we need to, whatever it is. But that is far more important. When they look at why do people leave their advisors, it's because he or she has never called me. Never checked in on me, never really acted interested. I was just felt like a number. So when I heard you earlier talk about, the sense of community, I think that, that's where you've already fostered it with your crew. I'm looking towards fostering that when we have our building, because now we kind of do have that place to meet on occasion. And even if I only see somebody once every 5 years, at least I saw them, once every 5 years, because some folks you just never hear from.
Some people don't necessarily want that, but I do think a lot of people do. And I've seen, Steve, where if you have a group of people that are coming together and they have camaraderie amongst themselves, but you're kind of leading that, I think that's a really powerful thing. It can be great for growing a business, but just feeling at home with who you're working with. I think it's a big deal.
Yeah, absolutely. And the team you build around you, carrying that out as well, needs to be kind of likable people.
That's right.
That have some social skills, which is harder and harder now with the phones and things. It's not necessarily, it'll be interesting to see what the world looks like, 10 to 15 years. But that's far more important than the actual return. Now, return is important. You don't get to stay in the business if you're not good at the business. So from the team's perspective, there's the portion of the internal team focused on the return and making sure that we're maximizing our strategy and matching strategies to clients for what they want. I go, but all in all, people don't leave their advisor for returns. They leave them because they don't care. They never talk to them. So that's what I would say. And it's easy when, like, I talk to my clients. If I've done my due diligence, and I also tell my clients that I have money invested in everything that they are. So when they call me and say, hey boss, I'm bleeding today, I'm like, yeah, I'm right there with you. My pool of blood's pretty big too, right? Yeah. So it's like, but we're not selling Apple, so no matter what CNBC is saying right now, we're not selling Apple, we're not selling Microsoft, we're not selling Amazon. Kind of or if they get into an alternative investment. They'll be like, hey, I want to know everything about it. It's like, I'm going to send you the pitch deck. I'm going to send you the term sheet. And, maybe you know what you're looking at, maybe you don't. But I go, at the end of the day, I didn't pitch this to you for you really to have to look all this. I pitched you because we have a 7-year relationship of doing business together. I've vetted these guys. I trust them. I've moved my own money in. There's no higher recommendation I can give. If they have Steve dollars, right? Then that's all kind of you need to know. And most of my clients, not all, right? Most of them will fall in line and go, yeah, if it's good enough for your money, then that's what I want to do too.
I like that. That's a great strategy. And it does build a lot of trust and confidence in your clients.
Yeah, and it's operationally efficient because I can stand there and say, look, I've vetted it. I'm in it. I'm very choosy. So, yeah.
I love it. That's a great way to kind of stand arm in arm with your advisor, doing the same things. And I do love that operational efficiency. That's something I'm going to look at our business and how we do things to really kind of push towards that, because I think that makes it great for the clients. Like you're saying, lower fees for them, and just a great experience. And I think that's great. And I love how you're always avoiding the catastrophe, which certainly when you're flying, a huge deal, or on the racetrack, right? A huge deal. Everything doesn't always go exactly as we plan it.
Like I tell my folks, I've been in the grass at Coda, but I haven't hit the wall. There's a big difference financially between those two.
That's the truth. Steve, how can people get a hold of you? Where can they, and tell us a little about where the building's going to be and everything that you have going on.
Sure. For those in the local area, the building's going to be just north of 1431. So you kind of think I-35 and then all the way over into Cedar Park.
Yep.
There's 1431 and there's New Hope Drive. Well, it's more off of New Hope, which is now 4 lanes, where they're building it 4 lanes all the way through. Huge,
big expansion.
But it's right off. It's going to be right off of that.
Okay.
So when you think, if you know the area, right geographically where Round Rock ends and Cedar Park starts.
Sure.
That's where it'll be. There has been a project that was supposed to go into there. It was called the Indigo Ridge Project that was going to go across the street, which is a Domain North kind of investment thing. That got scuttled due to COVID. There's a High Ridge that's been approved by Cedar Park to go in there, which is the same thing, upscale, dining, shopping, some residential in there. So it's going to be right in that area. I think something will go in that space, but that's where the office will be. And again, we'll be hosting events and bringing other investment firms in like yourself to say, hey, either talk to current advisors, just to answer the question. It's all build a relationship and educate. Business flows out of that more than anything.
Really does.
So that you break bread with somebody, have a beverage if that's your thing, and go from there. So that's where the building will be. As far as getting a hold of myself or the team, the website's the best way to plug in. Ankerstarwealth.com. It's a unique last name, so if you get anything close to Ankerstar, it's going to hit because it's unique. But really, we take clients, obviously in Texas, but we have advised, we take clients all over the world too, because a lot of my military folks were my initial cadre of clients.
Yeah.
They've retired overseas. And if you're interested, we don't have a minimum. So we like to help people that like help, and we can do that because of the operational efficiency. Folks that come in, might not necessarily get me for that account, but you get one of my team members, which I personally trained. And we, of course, all of our investments flow through to all the advisors, and they can make what's best for you, the individual, or for your family.
Yeah, I love,
So.
I love what you guys are doing. I think the building is going to be great. Can't wait to get out there and hang out a little bit. Until then, we'd love you to come back to some of our events, and so everyone knows. Yes, our events we don't fly around. Unfortunately, we're more land based.
Sure.
But we just like to have fun, and I think that's one thing about Under the Hood is we want to see kind of what's going on, and we'll take a look at something under the hood, literally.
Yeah.
Here in a second, and see if we can have some fun with it. But Steve, thanks for coming out. Thanks for telling us about your story. High speed, low drag.
Yes, sir.
It's a great way to live and run a business and serve your clients. So can't thank you enough for coming out to Under the Hood and hang out with us today.
Yeah, absolutely. Thank you for your time.
Absolutely. Good to see you.